Alrighty, what's going on, everyone? Welcome back to another video, another day, another dollar, where we're going to be breaking down our futures contract per usual. Right now, we're looking at our 30-minute time frame. We're going to try to run through this one rather quickly. Not a whole lot to discuss. Then we'll look at the SPY. We'll look at SPY ETF daily chart, just because it's a little bit more accurate right now, as we do have expiration of the March contract and then the June contract rollover happening at the moment, or it should have already happened. But for those that are getting in late on the rollover, things are a little wonky as far as the how the chart looks and what is actually happening. So right now we are looking at our 30-minute time frame, and essentially what you are seeing on the chart right now is just a whole lot of chop. There really isn't any directional move. Whole lot of chop. We came into a balance in yesterday's video. We talked about balance on our daily chart in SPY, and then we talked about how we were in a balance on in the ES in the June contract. We talked about how we were balanced there, basically using 51.57 as our balance low, and then 52.57.25 as our balance high. So about 100-point range that we're just kind of chopping around in at the moment. And that's exactly what we're getting right now. We're just getting a whole lot of chop, just boom, boom, boom. Right now, according to what happened today, it's not looking very, very bullish in my opinion. We had a pretty good move up yesterday, closing near the highs, and we would have liked to seen some more momentum to the upside. But from what it would appear is we're having a bit of a failure at a balance high. All right, so keep in mind we are in a balance high being up here, right? Balance low being in this range here. All right, so we're going to chop around inside of this area. So you have support, you have your resistance up here, and right now we are experiencing one of the balance rules, right? There are 3 balance rules when it comes to trading balance. One of them being getting near a balance high and rolling over. Second one being getting to a balance high, stretching it slightly. So that means getting to 52.57.25 and taking it out by about a point or two and then coming back in. Or you usually have the third balance rule, which is breaking out of balance, pushing through and away from balance using some type of trend. Right now, it looks like we are having a bit of trouble up here near the balance high and the all-time high. Okay, so it's no surprise to see that we had a bit of an inside day. Especially after yesterday pushing up, failing to go trend, but nonetheless grinded our way towards the highs. And then today we basically just hold above that line in the sand that I had from yesterday. Remember in yesterday's video, I was talking about 52.30, essentially where we had the volume POC, TPO right around the same range, 52.30. I was expecting us, all right, if we held that area, maybe, just maybe, we would have a good opportunity to go and take out the previous day's high, and then potentially get the all-time high balance high. Well, we came very, very close to doing such. Let me get rid of this real quick. We came very close to doing such, whereas today we did. Oof, I don't like the way that looks. We'll zoom it in, but not that much. Where we did push down lower in the earlier time frames after the open. Basically had unchanged value. We took out the overnight low. So sellers really had, not a lot in their corner, but they did have an opportunity to get this market moving to the downside. Now, buyers, on the other hand, failed, in my opinion, to really get any movement or momentum to the upside. Yes, they held above 42.30. Yes, they held above the afternoon pullback low, but they never really gained much traction to go and take out the previous day's high. Okay, but sellers also failed to take out the initial balance low. We didn't take out an initial balance. Remember the initial balance being the first 2 30-minute time frames of the day. We didn't take that out until later in the day, right around noon. We finally got the initial balance high. We also, because the overnight range was so small, let me see if I can bring up the overnight range for you guys. Because the overnight range was so small, we took out both sides of the overnight. We took out the overnight low, and then we took out the overnight high, both resulting in just, choppy price action. You can see here on the chart, just very choppy price action. So we took out both the or the overnight low, and then we got the overnight high, but getting the initial balance high. Usually whenever you get an initial balance, typically speaking, you will go in the direction that you take out the initial balance. But because there was mixed market generated information with us one time framing down early in the morning, getting the overnight low and having unchanged value, the chances of us really going trend and taking out the previous day's high kind of reduces a little bit, right? Especially once we create a wide point of control down here, right? We chopped around in between essentially 52.30 and 52.40 for quite some time. Now, keep in mind that is where we packed in volume is where I was interested in, right? We're packing in volume right here where we had that big liquidation break down, right? We spent no time on the way up. We spent no time on the way down. So we've been spending a lot of volume in here, filling in volume where there was no volume initially on that day. So that is something to keep in mind. So we essentially just been trading in that range. However, that led to choppy price action. Choppy price action leads to the worst of your risk reward. We had unchanged value. Once again, just kind of keep that in the back of your head. So when we established a wide point of control down here and we did spike up, got the initial balance high, initially, that's a really good short opportunity. Even though you're one time framing up, even though you got the initial balance high, it's a great short opportunity against the previous day's high because you're out and then what your target is on the downside, right? Your target is going to be somewhere around that 52.37 level or down to 52.35.75, which is what our point of control ended up being at. But being around that 52.38 to 37 level, anywhere in that range, you knew was going to be your target. So you're shorting near 46, looking to rotate back into 37. So about a 10-point gain on the downside, and you're risking roughly a point or two to the upside. So really good risk reward short up here, fading the extreme. And then guess what? We came back into value. We came back into the point of control, and then even had a bit of a liquidation break to the downside late in the evening, closer to the close, where we attempted to, not only did we take out the initial balance low, but we took out the overnight low again and attempted to go trend down. But just as we failed at the highs here, the chances of us getting the lows late in the day were also very slim because we had such a wide point of control because value was unchanged. Fading the extreme down here, not advised, but you definitely could have taken a long around 52.18, 52.20, using the previous day's value low, 52.15, to get out, right? Using 52.15, or maybe if you want to stretch it all the way down, that is a lot more risk, but the afternoon pullback low. But taking the long against the previous day's value low because value is unchanged and you have a wide point of control up here, 52.35.75, right? You're getting long around 20. Your reward's 15. Your risk is your reward's 15 points to the upside. Your risk is going to be roughly 5 to 6 points on the downside. So a little bit more on the riskier side of things. But look at what happened. We failed to go trend, just as we failed to go trend here in B period. We failed to go trend on the upside. We failed to go trend once again on the downside, and we came back into that point of control, right? So very good opportunity there to take a long. Yes, a lot of people got hurt, guaranteed, on trying to short this, which is what caused the rally back up to the point of control. So just a very choppy day. Whenever you're in a market that is in balance, that just means it is a market that is waiting for more market generated information. Now, the interesting thing is, if I pull up our destinations here, we had a wide point of control down here that got touched down to the tick, right? We had a 10 wide point of control down here around the 51.80 level that we touched yesterday. Guess what we created today? We created an 11 wide point of control. So what I was saying is, in yesterday's video, is that this might have been some accumulation down here, right? And all that got distributed up here prior to getting to the balance high and the all-time high. And you can see here by the volume, areas of resistance or areas of price that may be of interest to get short against, or take some profit off, right? More likely to take some profit off which is what caused some of this choppy price action here and the wide point of control. Okay, so price is attempting to be accepted, in my opinion, attempting to be accepted around the 52.30 to 52.40 level. If price does not seem fair up here, we will eventually roll over and test our balance low, which is going to be 51.57, right? So that would be one of the rules of the balance. I hope this is all making sense. In my head, it makes sense. But nonetheless, it has been very choppy, very difficult to read. So we go out today with just a 11 wide point of control right here, 52.36.25, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Is it 10 wide? 10? Yeah, it's just 10 wide, excuse me. So we go out 10 wide at we're going to say 52.35.75. All right, that's going to be a 10 wide point of control there. Make sure 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Count along with me. That is 10 time frames out of 13 that we traded back and forth through that price. So that would act as a magnet at some point in time. So 52.35.75. We have today's high 52.46, and then today's low 52.17.50. We have an inside day. Now, what does an inside day mean for the market? Well, whenever we create an inside day, whenever we come out of it, we look to go with it or monitor. Look to go with it and monitor it for continuation. So essentially, if we take out today's low, we will look for continuation to the downside, whether that means having single prints to the downside or single prints, or not single prints, but still one time framing down of some sort to the lows, right? So if we take out today's low, we should have no issue getting the afternoon pullback low. That would be a target on the downside. So maybe an area to take off a couple contracts on the short side. And then your next target would be the vacuum down to 51.80. All right. And then after that, 51.74 and then 51.57, right? That's if we come out of an inside day to the downside. If we come out of an inside day to the upside, right, and we open above what our 10 wide point of control is going to be right here at 52.35.75, if we open above that and get some continuation to the upside and come out above 52.46, then we should have no issues getting the balance high and the all-time high, right? So those are just some scenarios and some things that you can look for whenever you have a wide point of control, or not wide point of control, but an inside day typing wide point of control, excuse me. I'll tell you one thing, I am less likely to trade days like this. I did trade today. I took longs thinking if we held above 52.28, above 52.30, we would eventually go and get today's high, or not today's high, but the previous day's high, and at least take out the initial balance high. I was long about 15 contracts around the 52.33 point, 52.33, because I was just kind of accumulating down here at the lows, not necessarily at the low, but each time we came down, failed to take out the initial balance low, was a trigger for me to get into the long side. And you know, I could have taken the position off several times for a little bit of profit, but I was looking for us to get up to the initial balance high, at least 43.25, and take it out. I had my offer set at 44.50. I eventually took that offer out as I grew impatient, and then whenever it did push up to 38, I got out of the trade at 38.25. Right, so I made about 5 points across 15 contracts. So, you know, not a bad trade. Ended up on the day, but definitely didn't reap what I could have made on that. And the trade idea was correct to an extent. Yes, had I held longer, I would have gotten hurt, but I did have a stop in. And, you know, you just got to be able to take profits when you can, use your stops, know when to get out. So only one trade today, nothing of significance. Size definitely should have been a little bit more reduced, I think, because whenever we're trading in such a tight range, the chances of us getting stopped out is a lot higher, and poor risk reward as well. So there you have it. There are the destinations. High of day 42.46 or 52.46. 10Y point of control 52.35.75. Low of day 52.17.50. So if we open above the 10Y point of control and cannot come out of the inside day to the upside, and we fell, we don't get much continuation. We don't get above the balance high at 52.57.25. You will roll over to 52.35.75 and down to 52.17.50. If we open above, or not above, if we open below 52.35.75 and cannot take out the low day down here at 52.17.50, or if we do and fail to go trend or one time frame down and hold it, say we get around 52.07.50 and hold, and we get a little bit of a bounce, right? So say we open below and we kind of push down lower, we hold here, you will most likely bounce back up to 52.35.75, assuming you never get to that point to begin with, because then that would be a failed inside day down. So with that being said, let's move on to the larger time frames. And like I said, we're going to look at ooh, why did I do that? Like I said, we're going to look at SPY. We're going to look at the SPY daily because it's a little bit more accurate. As you can see here, we are in a balance on the SPY ETF. Same thing for the ES, but the SPY charts just look a little bit more consistent right now due to the rollover. So in a balance, just using SPY's charts right here, 51 or 518.22 is the balance high, 508.50 is the balance low. So if we come out of the inside day in SPY, you should look to take out 518. If we come out of the inside day to the downside, you should look to test 508.39. 20-day moving average is at 507.47. 50-day moving average at 493.34. And then just briefly, let's look at ES. Yes, it's not as accurate as it could be, just due to everything with the rollover and etc. And the premium in the price. On this chart, it's technically one time framing up 2 days in a row, looking to continue. All right, so that's where things get a little bit confusing with the premium and the rollover. Is SPY is in a balance, and then ES on the continuous chart is one time framing up. But whenever you go to the chart here for the March contract, we are still in a balance. So that's what I mean by things can be confusing with a continuous contract. And that's why we look at SPY whenever it comes to this day and age. But nonetheless, still an inside day. 20-day moving average 51.0141, or not 50, 20-day moving average 51.0141, 50 at 49.70.92. So looking to come out of an inside day to the upside or inside day to the downside, and just look for continuation in either direction. With that being said, ladies and gentlemen, I hope you all had a wonderful day. Hopefully you had a great trading day. If you would like to know more, join Paul Asmar's room. Go check out camelbacktrading.org. He'll teach you more than I know for sure. This is just a kind of a journey and a log of my knowledge and understanding of the markets and how I read them. And it's more or less for myself than it is for anybody out there. But if you do enjoy the content, please feel free to comment, leave a like. And if you'd like to support even more, go check out Paul Asmar on YouTube and camelbacktrading.org. We'll catch you guys later. See you.